welcome. The one big question in people's mind at this time is about the nature and the quality of India's economic recovery in the new fiscal year, especially given the fact that COVID cases are now spiking all across the country. How will this year play out economically for India in a global context? For perspective, we're joined on the Newstrack at this time, live and exclusive, by the Chief Economist of the International Monetary Fund, Dr. Gita Gopinath. Dr. Gopinath, welcome to India Today. You've just put out the latest round of IMF projections, which have the Indian economy growing at 12.5% in 2021. Can you explain to our viewers at the outset how you arrived at this number? What gives you the confidence that India will be the fastest growing emerging economy in the world?
Hi, Rahul. As always, a pleasure to join you. So we have a small upgrade for 2021. We had 11.5% before, now it's 12.5%. The reason for that was the continued increase in economic activity, the normalization, the recovery that we were seeing in terms of high frequency indicators. That was one part of it. The other part was the February budget, which added about 0.2 percentage points to our growth forecast. So again, India gets to 12.5% growth in 2021 fiscal year. But again, we have to keep in mind that it's coming off a very large contraction of minus 8%. But again, just to keep in mind that we locked in these numbers in around March 5th. This is before we've seen these record numbers in terms of the second wave in India. We assumed that there would be localized lockdowns, just because until you get to widespread vaccinations, things will not get back to perfectly normal. We expected that would be the case. And now, if, on the other hand, there is any kind of a much more widespread nationwide lockdown, then that would be a downside risk to our forecast. Because
one of the big challenges of coming up with projections at a time when there are so many unknowns is about how the COVID situation plays itself out. We're already seeing in automotive manufacturing hubs like Pune, there are far more restrictions than there were earlier. How could this potentially impact your headline projection of 12.5% growth? And what would you be looking out for when it comes to the second wave and the impact it can have on India's growth projections?
So in our 12.5% projection, we had assumed that there would be continued localized lockdowns. Again, another important factor to keep in mind is the connection between the virus, lockdowns, and economic activity. What we have seen around the world, and this is true in India too, is that the sensitivity of economic activity to these kinds of containment measures came down some. So again, it's still early days, but to be clear, a 12.5% growth is conservative given a contraction of 8% in 2020. So in terms of sequential growth, quarter-on-quarter growth, it is quite conservative.
How do you assess the nature and the quality of India's economic recovery in a global context? Because you're not just looking at the India story, you're looking at India relative to what's happening in other emerging economies and in a global context. How do you assess how India is doing vis-a-vis how other countries are doing?
Well, the good news is that India has returned to positive year-on-year growth. So it came down from the depth of its recession, and year-on-year had slight positive growth in the fourth quarter of last year. The point, of course, is that there is still a challenge in terms of covering the gap relative to where India would have been in the absence of the pandemic. So Rahul, just in terms of a number, if you look at the years of 2020 to 2022, over the 3-year period, on average, India's hit to per capita income is around 9%, relative to what it would have been in the absence of the pandemic. And for the emerging market and developing economies as a whole, that number is 5%. For advanced economies, that number is 3%. So again, good news in terms of positive year-on-year growth, things are recovering. But again, virus poses a downside risk, and still there is a distance to go in terms of still catching up.
How do you compare India's performance relative to China? China was in positive territory even during the main COVID year. Right now, China's projection is about 8.5%, which is less than that of India, but on a much bigger base. How do you see China pushing back out of this pandemic in comparison with India, Dr. Gopinath?
So among emerging and developing economies, in fact, frankly, for most other countries, China is quite ahead. It had positive growth in 2020. We have 8.4% projected this year. It's very close to where it would have been in the absence of the pandemic. So, it had much greater success with containing the virus, big push through exports that have come in. There's been a big boom in demand, pandemic-related goods. And with the global recovery happening, we had an upgrade for China. So, I would say in the global landscape, US and China both are the two countries that do stand out in terms of strength of recoveries.
Now, one of the big thrusts for the Indian government in this year is its privatization program. Privatization now being spoken of more openly, with intent being declared publicly than ever in the past, at least from what we've seen over the past decade and a half since the time of the Vajpayee government. But we're also in the middle of global uncertainty and a pandemic that continues to linger. How realistic do you believe the new disinvestment targets are? What's your sense of global interest in the Indian companies which will now be put up for privatization? And what do you think the government needs to do to ensure that these ambitious targets that have been announced can actually be fulfilled?
So, first is just to recognize that indeed the budget really stepped up on the privatization front. These are ambitious targets. This is something that we have said would be a good thing for India. So, in terms of intent, I think this is really a stepping up and stepping forward. Of course, Rahul, this is difficult in any part of the world. When you look at international experience on this, privatizations are complicated exercises. You have to make sure that there is lots of transparency, that you get enough in terms of competitive bids so that you don't end up creating another kind of a monopoly. So there are many parts to it. It's not easy to make happen. A related point I would say is that this is an important part of the revenue raising for the government in terms of privatization. But just given the challenges, I think we would also emphasize that it's important to do more in terms of the other forms of revenue raising, which is through more effective GSC implementation, in terms of removing subsidies that get wasted. So all of those would also be required to go along with privatization, just given how challenging it is to accomplish this.
What's your best sense, Dr. Gopinath, about the manner in which the Indian economy is being administered and steered in these turbulent waters? The government has announced major reform packages. We're trying to open up much more aggressively, shift to the center of right, whereas earlier the government was more conservative in the center, veering towards socialism and welfare. Now there's a visible shift. How is that being perceived worldwide, and what are you making of what the government is signaling?
So firstly, what is important for all countries is to make sure that their fiscal stance stays accommodative and that you're not tightening fiscal policy in the midst of a crisis. And I think India does well on that front. If you look at the budget, relative to 2020, it is doing, it remains around the same. So it's a neutral budget stance, which is good, and there's not tightening happening. So that's the first thing. The second thing I would say is that there was still in a crisis. The emphasis on the budget was mostly on capital expenditures. I think it's important to do some more on revenue expenditures, about 0.5% of GDP, for instance. That would be used for income transfers, in-kind transfers to those who are getting hit very hard in this pandemic. Those measures were withdrawn last November. I think it's important to extend it, spending more on education to reverse learning losses. So that is very important to get back a stronger recovery. And also what we're seeing right now, just in terms of the second wave and the large number of cases, is very important to have that done. The other piece is, yes, a lot of reforms have been announced in terms of labor market reforms, in terms of farm laws. Again, a lot depends on the implementation. I would just flag one more area where more will be needed, which is in the financial sector. As you come out of this crisis, non-performing loans are going to go up. You have to plan for more capital infusion into these banks. There was some in the budget, but more will likely be needed. And also to prepare for how you're going to deal with the restructurings of non-performing loans. Because credit growth, while it has come back from its depth, it's still weak. and that could be a major headwind. So again, I think it's welcome to have reforms. It's very important to continue to have welfare schemes, which is why I mentioned the income transfers that are still needed. A very large number of people in India are entering.
No, so what is it that you're pushing for, if I can ask you to elaborate? Are you asking for an extension of the income transfers that the Indian government is doing, which is what you advocated when we spoke to you last? Or since that is now seeming to be philosophically opposed to the government's approach, where they want to spend more money on infrastructure development rather than income transfers, are you suggesting that the welfare schemes that are continuing and the money that's been made available should be continued to be given to beneficiaries in the coming year?
No, I am saying that it's important to extend the income transfers that were provided and that expired last November, that they should be brought back and they should be continued for some time, given that there is still so much uncertainty about the crisis. There is a second wave. I think it's very important to provide those support measures. And capital expenditure is good. I think it's very welcome. The emphasis on health and public infrastructure is very welcome, but some more has to be done, even in terms of providing incomes and basic livelihoods in this crisis.
I want to speak a bit about the downside risks. The IMF report projects a rise in global oil prices of about 30% in 2021. We've already seen increasing rift between India and Saudi Arabia, where Saudi Arabia is trying to cut OPEC production. India, as one of the major buyers, is unhappy with that and cutting back on purchases from Saudi Arabia, saying this is not acceptable. How do you see inflationary pressures on commodity prices, especially on global oil, playing itself out in an Indian context?
Yeah, so the 30% increase in prices this year for oil comes from the massive contraction that happened in 2020 when oil prices completely collapsed. So, our expectation and our forecast is about, I think, around $60 a barrel of oil. There are OPEC cuts that are in place, which are supporting these kinds of prices. So I think over the medium term, the risks to oil prices are more on the downside, because as we see more supply coming up, as these cuts are removed, there will be more pressure on keeping prices lower. And of course, the world is also transitioning away from fossil fuels towards more kind of green energy. So all of that will keep oil prices low. But yes, in the near term, the risks are there of oil prices going up further as global demand surges, which is what we are seeing. Now, to your question of the implications for inflation, it does affect just the simple headline inflation numbers. The question is whether it affects inflation expectations, which is really quite important for monetary policy making. And then there is where you have to see in some countries, inflation expectations just don't move with oil prices. In some others, they do. But over time, just anchoring inflation expectations so that it doesn't move with these kinds of commodity prices is very important.
Let's speak about cross-border trade, where you're projecting that global trade will remain subdued, but strengthening to about 8.5%, 8.4%. Now, at this moment, international freight and travel haven't fully resumed. So given that, how do you see international trade play itself out, especially from an Indian export and import perspective?
In terms of global trade, actually, if you took at global merchandise trade, that has rebounded. It has recovered, and it's well ahead of the pre-pandemic levels. So just as we've seen around the world manufacturing recovering very strongly, we've seen global trade recover very strongly. So despite all the concerns of breakdowns in global supply chains, I think actually global trade has been quite resilient. What has not recovered is global services trade, and not surprisingly, given that tourism and travel is still well contained. For India, of course, again, one of the biggest exports India is doing right now is in terms of vaccines, and that is terrific. It has exports to over 77 countries, and that is a big part of the solution for this crisis too. So India is playing a very prominent role over there. But indeed, we expect to see global trade pick up. Not just pick up. It's doing really well, and India again coming into more parts of that global supply chain would be very good over time.
The Indian government has rolled out production-linked incentives in several sectors in the hope of drawing FDI into India, and the numbers on the look of it seem to be suggesting that India is attracting more foreign direct investment despite the fact that we're in the middle of a pandemic. How do you view the government's schemes? Because this at some level goes against the idea of free global trade, but also incentivizes manufacturing to move to India from countries like China. Is it working? How are you viewing what the government's doing?
I think it's welcome to see the government attracting foreign direct investment. I would say, right now FDI in the world is still recovering. It's not back to pre-pandemic levels, so these are still difficult times. But again, in terms of the big factors of attracting FDI, good infrastructure, the rule of law, good governance, those are very, very important factors in attracting FDI. And so India has had success in attracting FDI, but again, it will have to continue to work on that front. I would just flag one thing in the matter of capital flows and in investment. With the US recovering very strongly, you are seeing interest rates going up, and interest rates in the US are going up, and the expectation is that interest rates will go up even further. That usually poses a risk to some countries in terms of capital flows. And that's, again, something to pay close watch to.
Let's spend a moment talking about income inequality, because what this pandemic has done is it's made the rich richer at a faster pace than before, and it's increased the number of poor, and the number of people who've slipped from the middle class to the poor, according to data put out by the Pew Research Foundation, has gone up. In fact, reducing India's middle class, according to a Pew projection, by about 32 million. Now, how do you see and assess what's being done to deal with the challenge of income inequality, and what further measures would you like to advocate?
Yeah, so this is a major concern. We have around 95 million who are estimated to have entered extreme poverty just in 2020. 50 million of that is in India. Now, as India recovers and as per capita incomes come back in India, of course, those numbers will shrink. But again, this is tied to my first point about the need for providing cash transfers and in-kind transfers that have to be continued because many people are in deep distress. Now, as the world economy grows, as you have recoveries come back, that itself will, of course, address the problem of poverty. But on the other hand, of course, government should pay very close attention to make sure that rural workers, urban poor, all of them have the jobs that they need to maintain their livelihoods. Again, we have to be worried about the hit to human capital that's coming from the loss in education for children, and especially for poorer households. That's a big hit to income inequality in terms of their prospects going forward. So again, there is a lot that still needs to be done on all these fronts.
So what is it specifically that you're advocating? Because what the pandemic has done is it's speeded up the process of digitization in most countries, and a lot more processes are automated than they were earlier, and that seems to be a trend that is now here to stay, which in a country like India with the kind of demography that we have creates a huge skilling challenge. Do you have any thoughts on what's being done and what more you'd like to see?
Indeed, with automation having accelerated, and digitalization, on the plus side, you can have improvements in productivity, but you certainly have some skill classes losing out, and that is a big issue. The solution from around the world, if I'm just looking at experience, has been reskilling, retooling, giving hiring, very targeted hiring subsidies to firms so that they can attract some, kind of hire more workers, low-skilled workers, and then provide them training in-house. Those are the kinds of schemes that will be required. And again, kind of more emphasis on education, preparing for the technologies of the future. All of that will be needed. Now, it's not easy. Reskilling, retooling is easier said than done. But again, you'll have to just push on that front and figure out how to get more people skilled enough to adapt to the new kinds of technologies.
One of the biggest challenges coming out of the pandemic is to ensure that the non-performing assets of our banks don't skyrocket as some of the support measures provided by the RBI and the government are pulled back. Now, the financial stability report pulled out by the RBI says that in the extreme distress scenario, severe distress scenario, bank NPAs could rise from 7.5% in September 2020 to 14.8% in September 2021. How do you think we should approach this very delicate situation and prevent NPAs from spiraling?
So firstly, Rahul, I think you should think of this as quite the baseline, which is that it is very likely to happen, that you will see an increase in non-performing loans. So ex ante, the steps that will be needed, of course, is sufficient loan provisioning for these kinds of loan losses that are very likely to happen, raising more equity, maintaining more capital buffers in the banking sector. The government will probably need to plan for making more capital infusions into public sector banks. So again, I think this is a very real scenario that's likely. Now, the faster the recovery, the less non-performing loans are. But if you're going to, given what we're seeing in terms of the second wave, that's going to affect bottom lines for a while now. It's going to have effect on firms. And so again, I think these are some of the steps that I mentioned, which is in terms of provisioning for these expected loan losses, capital buffers, raising equity, government planning for capital infusion. All of this should be part of the plan.
Are you following the...
I'm sorry, I should also mention that in terms of the insolvency and bankruptcy framework, I mean, to make that more effective, get much more out-of-court restructurings done, that will also be needed.
Because the pressure in India from corporates and the increasing view in the government is that the current insolvency framework is too stringent and in fact needs to be opened up so that more companies can be prevented from going into insolvency, because once they do, then because of litigation and the delays, the IBC is not playing itself out in the way that had originally been envisioned.
There certainly needs, more to be done on making this particular solvency framework work better. I think it started out, it was promising, and then it's run into problems, which is what one would expect, and you have to address those. Of course, the budget also talked about an asset reconstruction company that would be set up to deal with the non-performing loan problem. Again, the design of that is going to be very essential. I haven't heard too much on that front. But again, so that's another way in which you can address some of these challenges.
Now, the government in India is under pressure from protesting farmers, which will become a big issue post the 2nd of May, about guaranteeing a minimum support price. We've seen protests in Punjab, we've seen protests in Haryana and Western UP. Are you following the farm protests? What do you make of the pressure from the fields on the Modi government to try and legislate a guaranteed MSP?
So Rahul, I have nothing new to say on the farm laws front. Like I said last time, we believe that it has the potential to benefit farmers in terms of raising their incomes. And of course, there are transitional costs, which is why you need a safety net for farmers. In terms, of course, of guaranteeing the minimum price, that would be a big break from the past, because that was not what was ever provided. But again, at this point, given that the Supreme Court has suspended the laws, the government has put it on hold for 2 years, and things are being reviewed, I will just wait and see what comes out of those reviews.
As we come to the end of this interview, I'm wondering if you're thinking at the IMF about vaccine passports. Everyone very curious to know how and when we'll be able to travel again for work or pleasure. How do you see, or what's your framework for vaccine passports, a currency which is acceptable across the world, which will allow people to travel again once they've been vaccinated?
We certainly want to get people to travel again and get the global economy going in terms of people moving around. Vaccine passports are one way of doing it. Of course, again, we have to be careful that this doesn't end up being discriminatory or doesn't end up excluding people that should otherwise be allowed to travel. So, again, the details are going to be very important. But any of these schemes that can get everybody moving and traveling would be very welcome.
Okay, you spoke about the quality of governance. There's been a report from Freedom House and also from WeDem Institute's Democracy Report. Are you looking at those? Are you concerned about those? Does that in any way impact how the world perceives India in your view?
Again, right now, the big challenge for India is getting out of this crisis. And the number one priority is widespread vaccinations. And I think if that can happen and you can see much stronger recoveries and getting people out of the poverty that they fell into in this crisis, I think that's what would signal that India is fully and completely back.
Well, we've had an opportunity to talk to you about a wide range of issues. Thank you very much for your time. As always, Dr. Gita Gopinath, Chief Economist at the International Monetary Fund, talking about India's recovery and what could impact the numbers that have been put out from here on. Thank you very much, Dr. Gopinath, for your time.
Thank you, Rahul. Always a pleasure.
This is where I wrap up the Newstrack tonight. I look forward to seeing you at 8 p.m. tomorrow evening with another action-packed edition of the Newstrack. Till then, from all of us here, goodbye, good night. Thank you for your time and your trust.